Hello traders, it is Sunday, January 19th, and it's time for our weekly video. Monday is a legal holiday. It's also Trump's inauguration, so market will be closed. First trading session will be Tuesday, so you'll be able to get a little jump on your research, perhaps incorporate some of the things that I'm talking about. Let's take a look at my most recent picks. AFRM. That was 3 sessions ago. That stock still looks like a good short. I've been favoring the short side. We'll get into that in just a second. I like the fact that it's been able to stay below the 50-day moving average and AVWAP-E. And you can see this tiny little bounce off of the 100-day moving average, but certainly not a huge move, given that the market last week rallied all the way from its low of the week, which was 575 to about 597. That's over a 200-point S&P 500 move. Big move. Not completely unexpected either. So the other pick that I gave you was LVS, and that was from a week ago. Man, was that a nice pick. And you can see how that stock dropped all last week. And from about the, let's call it $47 range, down to about the $43 range. Nice $3.50 move or so. You can see how once it broke that 200-day moving average, it was pretty smooth sailing for the stock, and it moved against the overall market, which I just mentioned was up. So that tells us that this stock is really strong. When I hover over the E, you can see that it's red. It announces earnings on January 22nd, so you need to close the position down. Take your gains. We're in the heart of earnings season, so you need to watch that earnings calendar every day, not just for the positions that you have on, but for tangential plays, because if companies are highly correlated, another company that's from that same group could have a big impact on your holdings. So make sure that you're watching the upcoming earnings releases. On Wednesday, we did our live event, and SIG was the stock that I highlighted in that live event, and we had a nice long red candle on a big gap down for this stock. They had expected same-store sales to be in the plus 2% range. They provided guidance. Now they think same-store sales are going to be minus 3%. That is during their busiest season of the year. Not good news. This is a significant breakdown. I still like this short, but we're waiting for the market to show us signs that it's ready to roll over. So, consistent with today's thumbnail, I hate this trading pattern. I do hate this trading pattern. It drives people nuts, and it used to drive me nuts before I figured it out. And so this is a downward sloping trading channel. Everything is okay in here. You can see how the market's grinding higher. This is actually a trading channel of its own. Again, drives you nuts because you see this nice move higher and then you think, oh, here we go. We've got a breakout to a new relative high. I'm going to start getting long in here because this is a beautiful breakout and we've got follow through. Then all of a sudden the market kind of stalls out and you get this pullback. Well, in here you're thinking, oh no, this thing's going to roll over. I'm on the wrong side of it. So you puke out of the position and you even consider maybe taking some short positions. Whoosh, the market breaks out to a new all-time high. You were right the first time. So now you start thinking about, well, maybe I should get back into my long position. So you reestablish the long position, and then the bottom drops out again. I can't win here. What the heck is going on? This is how you need to trade an upward sloping channel. You set your channel lines, and I typically like to draw, in the case of an upward sloping trading channel, I like to start with the lows. Once I get that line in place, then I look for something that's roughly parallel with that line, and all of a sudden it starts to make sense. Oh, we get a rally, take gains. We get a dip, enter longs. We get a rally that stalls out, take gains. We get a dip, re-enter. We get a rally, take gains. Wait for the dip. Get the dip, buy in the dip. Get a nice big rally, take profits. Get the dip, re-enter longs. Get the rally, get out. Do you see how easy this is? But it's not that easy because in the heat of battle, you're not able to recognize that this is a trading channel. So the earlier that you can get on board and the earlier that you can recognize it, the more effectively you can trade this pattern. And you know that I've been fairly bearish over the last few weeks. I don't like what I see developing on a fundamental basis. So we took profits on all of our bullish swing trades in early December, the first week of December. We're just going to wait and see what happens. Blam! We get that big crackdown from the Fed. Okay, that got our attention. That tells us that there's some legitimate selling pressure. Bull markets die hard, so we expect to see a bounce. We get the bounce. While we're waiting for that bounce, in our minds we're telling ourselves we want to see a lower high because that tells us that the market can't even get back to the previous high, and sellers who were aggressive here are thinking it's not going to get back there. Blam, blam, blam. They come in and they start to sell and the market drops. So we have a new relative low right in here. Great. That's the kind of price action that we want to see. And now all of a sudden we get another little bounce. Okay, well, is this one going to rally up and make a new high? If we're bearish, we want confirmation that resistance is there, that the selling pressure is still there. It is, and the market backs off. Okay, now things are starting to make a little bit of sense to us. But in here, we couldn't really get aggressively short. We didn't know yet. We didn't know what these bounces would look like. But now we've got a series of lower highs. And then we can find a line that gives us a trend line for those lows. And okay, now we're operating within the context of a downward sloping trading channel, and we can start to structure our trades. We get this low here below the 100-day moving average with a nice long green candle closing on its high and closing above the 100-day moving average last week. That is a bullish sign, and we understand that we should be expecting a bounce. And if you watch my video last week, I'm telling you, watch for a bounce here. So we get this nice bounce, but we don't need to be trading the long side and getting cute in here because one of these bounces is going to turn out to fail and the selling pressure will increase and then you'll really be stuck. So from my perspective, the only way that I want to trade right now is to favor the short side. And I want to see these continued lower highs. Wait a minute, Pete. That downward sloping trend line you drew, it's been breached. Yes, it has. So we're doing nothing right now. We're also above the 50-day moving average. We're also above AVWAP-Q. That's right. How did we get here? Very important. We got there through a nice gap right in here. So let's go in and take a look at the 15-minute chart. One thing that you will notice, look at that dismal volume. It's awful. This move took place on no volume. So it just kind of floated higher. There is some optimism going into Trump's inauguration because a lot of his policies are pro-business. In fact, if you look at inaugurations in general, they tend to be pretty bullish for the day or two after the actual inauguration. So what am I watching for now? I'm on the sidelines. I'm in cash. I don't have any exposure. I've got 3 stocks that I'm watching for potential short. I like AFRM on the short side. I like SIG on the short side. LVS, I got to be taking profits on because they're going to be announcing earnings this week. So this week, we're going to be finding another short. All we're doing is we're waiting and we're stalking and we're watching. And I had posted this in the chat room because I'd said Wednesday during the live event, I am looking for the market to move higher. What do I want to see? I want to see light volume and mixed overlapping candles. That tells me that the market rally is not that strong. It can be easily reversed. I don't know that it will be easily reversed, but it certainly doesn't show a whole heck of a lot of conviction on the part of buyers, because they would be in there with big volumes saying, this is it, man, I want it right here. We're taking this thing to an all-time high. We're not seeing that. The longer you stay below these major moving averages, the more likely you are to test the lower moving averages, because it's a sign that instead of jumping off of these moving averages like we did back in here or in here, now all of a sudden sellers are keeping a lid on the market. And they're looking out 2, 3 months from now, 6 months from now. They aren't looking at what the news is coming out right here, right now, because the news has actually been pretty decent. I think we're going to see that deteriorate very soon. Jobs report. Last jobs report came out gangbuster, 250,000 plus. Hourly wages were low. Awesome number. ISM services came out pretty decent. I think it was around 54. And oh yes, let's not forget, China came out with 5.4% GDP growth last week. Yeehaw! If you believe that, I got a bridge I can sell you. I would already projected that they were going to come out with a 5% growth rate. It's nowhere remotely close to that. I promise you. I am looking at lots of data points. They include things like electricity usage and smog and all sorts of things where we're not reliant upon what China is reporting to us. I think they're probably at 0% growth, possibly even negative growth. They've got deflation that they're currently trying to resolve. They've pumped a bunch of money into their system. It's not helping. People are not spending. So I see China as this storm that's brewing, second largest economy. It's going to be a problem. And this can fester and fester for years. I've seen it. I've been through it. 2006, late in the year, early 2007, we started to hear some rumblings about Countrywide Financial, and maybe they didn't make such good loans. And then everything was fine. In fact, even in 2008, the market still got within striking distance of the all-time high. What? Credit crisis, what a bunch of malarkey. So it just festers and smolders. And when it ignites, things escalate very, very quickly. And I feel that China is at that tipping point right now. A lot of their municipalities, they haven't paid workers for 5 or 6 months. They got garbage in the streets. People are I hate to say, they're protesting in large numbers because they haven't been paid for many months. You've got the Chinese government is raiding companies, and the way that they're doing that is they're fining them. This is a gigantic cash grab because they don't have any cash. And to a large degree, their economic growth has been funded through real estate property sales. That's how the provinces were generating revenue. That has completely dried up. So they don't have any revenue. They don't have any money to pay workers. So do your own research. I'm telling you, China is a problem. Is it going to be a problem this week? Maybe not. Maybe Trump's inauguration and a lot of positive news is going to attract some buyers. I know that the hour is late. I know that a month from now, 2 months from now, certainly, we should be seeing some economic contraction. This is also consistent with what I'm seeing in Europe. Germany, on a real basis, has had negative growth for 2 years. So things are not robust anywhere around the globe. India's been growing, but their total GDP is about 9-10% of total global GDP. So it's a relatively small player as of yet. So I think that there are going to be some issues for the overall market. And I can see that already in this selling pressure here. And know that when the mega cap tech companies announce earnings, many of them generate revenues in China and overseas. And I think that you're going to see some of that weakness bear out in those numbers. So you may not see it in the Chinese economic releases, but you're going to see companies that do business there cite weakness. So I'm just waiting to see how everything plays out next week. The news for next week is pretty light. We really don't have anything in the way of large economic releases. We do have some earnings releases. So let's take a look at what we've got on deck there. And we've got, take a look at an earnings search that I pulled up. So we've got earnings projected today through the next 5 days and good option liquidity. Those are the only two filters I used. And if you go through the list, you'll see some airlines, some more of the bank stocks. Bank earnings have actually been pretty decent right now. I do know that domestically, we've got credit card delinquencies on the rise. There are some credit issues. I believe that all the stimulus that we got from COVID a few years ago, all those trillions of dollars have finally run through the system and they're being exhausted. And I think that's going to weigh on economic activity. GE, and there's your LVS, 3M. Netflix is probably the biggest out of the group. So those are your earnings for this week. There's not a lot earnings-wise to drive the move. So I'm going to take this down and I'm going to talk about the price action that I am going to be watching for. Consistent with this downward sloping trading channel, what I'm looking for is a sell the news reaction to Trump's inauguration. And so sellers are cognizant that the inauguration will have a bullish tendency. We're still in a raging bull market. I mean, this is something that's very hard to fade. That is a very strong, powerful move. So they know they don't have to hurry. They're going to have opportunities to short. If the market gaps up on Tuesday, what I will be looking for is a big gap reversal off of that relative high. Okay, now that was Fed day and was actually here. So let's take a look at this because that'll be a good example of the type of price action that I'm looking for. And that day was January 7th. You can go and do this yourself also. If you're looking for a pattern, go back and look at previous price action so that you get an idea of the patterns that you're looking for. And that would be it right there. You see decent selling the previous day and you have a gap up. So what we'll be watching for Tuesday is a nice big gap up and lots of optimism, and then a sell the news type of effect where you get red candle, two solid red candles. They've got to be decent size and they need to close on their low. So I don't want a bunch of this wishy-washy mixed overlapping candles. I don't want a lot of retracement. I want to see donk, like that. Two nice, solid red candles. I'd like a nice gap up too. That would make me feel even better if I saw a nice big gap up with two consecutive red candles. Then I'll know, aha, sellers are aggressive. And the chance of a gap reversal is much higher. And on a gap reversal, typically, and this is not a really great gap reversal off of a relative high, you're going to see very steady downward price action, excuse me, that will look more like this. Just steady, whap, 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 whap. Market can't come up for air. And that type of price action early in the day, you want to see that gap reversal very, very early. Okay, so the longer you go through the day, the less likely it is to happen. If you get through the first hour of trading, probably not going to happen because you need sellers to look at that opportunity, that gap up, as the last good chance that they'll have to get short, and they are going to nail it. So get the gap up, and then constant selling pressure, easy breach of the prior day's low, which is this doji, easy breach of the 50-day moving average. And if you get that, we're going to continue to move down, probably take out AVWAP-Q, and we'll get a candle that looks like that. That's what I'm looking for. Okay? If I get anything different than that, if the rally materializes and I start seeing mixed overlapping candles, that's going to tell me that buyers are supporting the move. I'm not seeing that aggressive selling that I want to see. So I do nothing until I see that type of heavy selling. So, Pete, what happens if the market opens a little bit higher for the first half hour and then it gets smacked down? That would be okay, but I'd want to see something pretty wimpy like these mixed overlapping candles like this and then a sell-off. So a little indecision, not a strong move. They're trying to rally it, and within the first hour, then you start seeing these stacked red candles off of that high. Sure, that would be fine. What if, and this is the scenario analysis that you have to go through every day, okay? Here's where the market opened. Here's how it relates to the previous price action. This is my market thesis. This is my market bias. How is this piece going to fit into the day? And what are those price patterns like? What do they look like? What am I looking for so that I know when I get what I want and it tells me if buyers or sellers are in control and to what degree? What does that pattern look like? I have to visualize it. Because when I see it on a 5-minute basis, I got to be ready to go. I got to start acting on it. I can't sit back and watch the first 3 or 4 candles go and, oh my God, the S&P's already 25 points lower. What do I do now? You can't be in that mode. Things happen very quickly. You have to know what you want, where your highest probabilities are. That's putting all the pieces together ahead of time, including the price action that you're wanting. So let's say that the market rallies. It could happen. This could be viewed as a great opportunity, and you could get a nice long gap up with some follow through. What am I going to do? I'm not going to do anything. I'm not buying it, okay? I'm just not ready to flip from bearish to bullish because of some inauguration hype. I'm not going to do it. I see a lot of things happening in the background that are really not market friendly. By the way, forward PEs on the S&P 500 and on NASDAQ have not been this high since, wait for it, the tech bubble. They're pretty high. So, lots of optimism right now. That also favors the downside as far as I'm concerned. And a lot of the AI projects that the Mag 7 are putting money into, they're putting billions of dollars into AI. It's not going to bear any fruit for a while. Kind of like when we were in the dot-com bubble, some of these companies were going to survive, some of them weren't. Right now, all you have to do is put AI in your description for the company and woo, that's worth 20% right there. It used to be .com. You had .com in your name, man, you're going to lift off. A lot of fluff out there. I'm not buying it. I'm cautious. And if I see market lift off and I see a nice gap and go on Tuesday, I'm going to be really passive. And maybe I'll stick to some day trading. I won't miss the move entirely, but I'm not going to carry any long overnight risk exposure. So that's how I'll treat it. And what if the market gaps down on Tuesday? What about that scenario? Would I short that? Because gap and go, downside, we don't like to chase gap and goes. In this case, I don't see that as being an overextended move because we just rallied more than 200 points off of the low in a week. So if I get a gap down, I'm viewing that as confirmation that this downward sloping trend line is still intact. I'd like to see us take out the 50-day moving average instantly on the open. And then I'm going to expect that we take out a VWAP-Q and we easily get through these two candles, the low from these two candles and a VWAP-Q, and we start getting into this gap and go down. I will take a small starter position. I'll wait for additional red candles. I'll add on them. We take out a VWAP-Q. I'm going to add every time I see a green candle that is instantly reversed the next bar or two by a red candle. I'll add on that because that confirms my thesis. So gap and go up, not going to touch it. Don't want to have anything to do with it. Gap up, I'm going to be watching for a gap reversal. Get a little wimpy half an hour rally off of that gap up. I'll still be looking to fade it, but I need those red candles on heavy volume. If I get it, I know we're going into the gap that was caused overnight, and I know that the chances for a nice gap reversal and some momentum on the downside are there. Add. That's what I'm looking for. So let's find a stock that could be a nice short for us. I had mentioned to you earlier that when I highlighted SIG, S-I-G, on Wednesday, I'd mentioned I'm expecting a rally. When the market does rally, what do I want to see from SIG? Am I taking a short right now? No, because I think the market's going to go higher. But I have it on my radar, so I'm going to be watching for very sluggish price action on the upside out of SIG. What did it do? This is the live event Wednesday. So you got market rally. Let's go into a 15-minute chart so we're comparing apples with apples. So this is the live event Wednesday. Look at how high the market went. Look what the stock did. Down. That confirms that there are sellers out there. If there weren't, you would have seen a big old bounce in the stock. But even with the market going up, the sellers were like, not gonna have it. Selling as much as I can. That tells me that when you have any kind of market weakness, this stock is going down. And I will be ready to short it. It has relative weakness and it has sellers. So that exact same mentality is what you'll want to use for the pick I'm about to show you. I ran a quick search and I used relative weakness across M30 to D1. So many time frames. I also want to have a bearish trade signal. And this was a little different. I want a stock that's below the 100-day and below the 50-day, so that tells me that there's some short-term weakness. But I have it above the 200-day just so I've got some cushion down to that support level. So it's still got room to move down to that 200-day moving average. Heavy option liquidity. And yes, I could have gone bearish on all three of them. Then I'm going to be finding a stock that's in a serious downtrend already. But there weren't many qualifiers for that. So when I take a look at this list, right at the top is Apple. And that's what I'm going to be focusing on right now. So Apple. What has Apple done recently? Let's take a look at the D1 chart. Well, it rallied up very nicely in here into year end. And look at the steady selling pressure that we've had. Remember, what the market's done is kind of this choppy downward trading channel. It's had pops, pop. So there's nothing too steady here. This is just a choppy downward sloping trading channel. What has Apple done? That is nice and it's pretty steady. Wait a minute. We took out AVWAP-E. We took out the 50-day moving average, and we are spending time below it. Pete told me that when we start spending time below major moving averages, that it's getting comfortable there, and it's a sign of selling pressure. So we didn't jump right off of it. And so you can see on Thursday here, ooh, that is one long red candle. What do we like to see when we have a long red candle? Well, we know that a bounce is probably coming, but we'd like to see the halfway point of this candle preserved. That tells us that even though this move was a bit exaggerated, that if that halfway point is preserved, it's legitimate. And then on Friday, with a market that was moving higher, gapped higher, bring up the 5-minute chart. These are the comparisons you've got to make. Look what the market did. Rallied nicely. What did Apple do on a 5-minute basis? It tried to rally with the market, sold off the whole day. Barely even finished above the prior close, which was some nasty selling. That is some beautiful price action. Those are your geese in a V formation on what? Heavy volume. We get this pattern and we get that volume. That is a tell. That is what allows us to predict future price movement because we know that sellers are motivated. They could not get the market to rally because they were in there slapping it down. When you see that price action, you put Apple on your watch list. It is on your radar for a short, okay? And then you watch it and you see market rally. Cool. Is Apple staying low? Yes, it is. Good. That tells me sellers are still in there and this is the real deal. Now all I need is that market confirmation that it's going to sell off. And I might be at that juncture come Tuesday morning. If I get a gap up and a gap reversal, I'm all over it. I get a gap down, blow through the 50-day moving average, I'm all over it. I'm not pecking around. I'm not searching around. I know what the price action is that I need in the first hour of trading Tuesday. And if I get it, I've already got my short picked out because I know that sellers are in this stock right here. That's how it works. That's how all the puzzle pieces fit together. So I'm not crazy about this trading pattern. It drives a lot of us nuts until we can figure it out. Now, once you get a longer term trading channel, you can look at the chart and you can go, oh, of course. I mean, I could see it plain as day, whether it's this trading channel in here where you draw the high and the low. But when it's forming, you've got a trading channel right in there that you can draw. Well, when you're in the final last 25% of it, it's absolutely apparent. When it's just starting to form, like right in here, you're still thinking, well, this looks like it could be a trading channel. I am making lower highs in here. So still don't know about the lower lows. Well, by the time you got that and that, then you're like, okay, this is a trading channel. Well, it's almost run its course at that stage. So we're in an uptrend. So right now, your upward sloping channels will be nice and lengthy and long. You'll be able to see them really easily. I think we're starting to form a downward sloping trading channel. That's what I'm going to be trading. I'm not going to be doing anything more than short-term trading the upside from here in. So if we get that big move higher, I'll day trade it a little bit. It's come on light volume. I suspect I'm right on this, and I suspect that the next move, once we find resistance, is going to be down. It could even test the 200-day moving average, and that would still be in range of this downward sloping trading channel. So watch for that. Please leave your comments. Let me know what you think. If you've got any kind of trading questions or stocks you'd like me to take a look at, you can post those as well. Thanks so much for watching, everybody. We will see you Wednesday for the live event. I believe we're going to be doing a live event. We're looking to kind of change things up with the live events too. So watch for that, and we'll see you then. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.